Audio morning brief for the U.S. grain market, 7:53 a.m. Eastern Time, November 10th. Let's talk about wheat first, since I got the chart in front of me. Level 3 top 2 days ago. Market can bounce today into Monday, Sunday night for level 4 interweek swings, but believe the level 3 trend has not yet bottomed, so I think we'll see some additional selling by next week. However, the market can bottom as soon as next Monday. It may even bottom as late as early the following week, but likely to bottom next week. So bottom line is, I think there's a little bit more selling going, but I also think it's limited. I think this market wants to work higher into the end of the year, or at least be stable, base building, and somewhat higher. I don't know if there's any real explosive move, but I will say the explosion in prices 2 days ago actually had some of the better of volume they've seen in a while. And even some of the global traders stated that they felt like in the U.S. market, in the futures market, a lot of shorts were covered. They were too short. Now, that may have been too fast of adjustment, and they're just going to put the shorts back on now. But I think it's waking up people that wheat's low enough priced here. There's probably good enough demand to keep some stability here. And I still think we're either forging a long-term bottom or the long-term bottom's in place, okay? All right, that's the wheat market. So basically, I think downside is limited to maybe 565 December Chicago. Wouldn't be surprised it's actually gone as low as it's going to go as of this morning here and yesterday's low. But it does look like if it bounces, it ought to set back a little. It kind of needs to coast into next week for the level 3. Looking 2 weeks out, 2.5, 3 weeks out, I think we'll probably see another uptick in the wheat market. All right, let's move with a backward rotation here. So I am going to go with the January soybeans. Level 3 top as of yesterday and report day, and it was a consecutive 3-day head and shoulders pattern, and the market followed through to the downside, and the report wasn't bullish enough for people. I think it's due to bounce by Monday, Sunday night, and maybe even start bouncing today for level 4 interweek swing. If it bounces quite a bit, I'd be a little concerned. It's just a late level 3 top after all, and it just comes down anyways. I think it's probably not going to bounce any more than the 5-day average, currently around 1355. I think it should go lower into next week. But like the wheat market, it could bottom as soon as Monday. It doesn't have to bottom to early the following week, but it likely will bottom next week. I think there's additional selling over buying to occur in the soybean market. But I think when you look at the fundamentals, the psychology, the available demand, the available supply, the USDA data, which is really more long-term guidance, when you consider some issues in South America that might favor some future weather crop issues here, I just feel like it's limited downside into soybeans, but the daily indicator is acting quite bearish. It's widespread, my favorite indicator, the daily stochastic. Wide enough spread to assume chance for lingering near-term downside momentum next 1 to 3 days, and that's what the model's suggesting, so it's working, and it's leaving mid-range, heading towards oversold. I think there's more downside coming, but I think there will also be some ripples, some bounces along the way. We might start one of those bounces today, at least by Sunday night into Monday, something like that, and then probably down again. And again, I don't know. I have to allow 13 to 1280, okay, believe it or not. But I think it's going to stay above 13. I wouldn't be surprised if it stays above 1320. But I think there's still more room for downside and some retracement here. Things need to chill out a little bit. But I'm still interested in another recovery later this month for that more important top. It may not go any higher than what we've already seen, but the door is open to go a bit higher as well. So we'll discuss more of those larger trends in late November on Tuesday in the video update to better explain that. But on a short-term to very short-term basis, yes, it can bounce a little, but it really ought to be down some more going into next week. So I assume eventually it will violate yesterday's low at 1336. Okay, that brings us to the corn, and disappointed with corn that the yield was higher and the market's disappointed and the bears are happy-dappy. So level 3 top this week, level 3 bottom last week. The overall bias was correct, or is correct, that the market all go lower into next week. We got the fundamental information, we got the data. Market doesn't seem to be that interested in trading lower, but since there's time, it may suddenly speed lower. You do have to consider 460 to 450, okay, at least to 455. And we may have a problem for the rest of this month, even into December, that even though it's due to bounce by December or something like that for those larger trends, it can be right back down as well. This market may now have problems all the way into January, Feb. Here's my theory. I think it's going to bottom soon for a level 2 bottom, maybe as soon as next week. And then we get a bounce, but I think by late December, January, Feb, we'll see it right back down, maybe a bit lower. But I think what will happen is there's going to be a more important bottom by Jan, Feb that's actually going to be a little higher price than the low of this month. So even though in theory this level 2 is lower than level 1, that forecasts lower by Jan, Feb for the next level 1, I'm not buying into that. Maybe what it's going to build is a head and shoulders pattern, a very subtle one, from September of this year on into Jan, Feb, which would mean the head or lowest price probably comes in November. And this basically just means limited upside and more extended long-term base building, which I've said all three markets can do that. They really don't have to do much of anything for the rest of the year and still be in a long-term developing type bull market, okay? Any rate, I think probably the market's going to be, people are going to be concerned of more downside until you can get this market above 481 December, all right? And really, I don't have anything else to say here. I would like to think it's going to put in a level 4 bottom today if it didn't put it in yesterday. And this suggests it ought to bounce today, and then it may be all over today and down on Monday, but it may bounce into Sunday night and then down on Monday. It may bounce into Monday, then down on Monday. Don't know for sure how that's going to work out. All it's suggesting is, yeah, it's ready for one of those half-day to 2-day type bounces. And then it ought to work lower still, meaning it should take out yesterday's low eventually at 466.5, going into a level 3 bottom next week. Now, if it's very subtle, if it doesn't suddenly just surge to the downside, just drop, I think the technical indicators might give us inharmonious action that converts to a positive divergence, a better bullish signal for a bottom here. Because right at the moment, the indicators and the price action, and of course the indicators are linked to price action, it just seems like they're really not that interested in selling this increase in yield. And it really isn't the yield. It's everything, including the ending stocks. The ending stocks ES is above 2 billion. And if it had been a little above 2 billion, in the past 2 or 3 years, I don't think the market would really care. But I think the market feels like we don't have, if you can say we have good demand, strong demand, it's really not quite there. There's something different about it. Another way of simplifying is just saying the demand isn't as strong as it used to be, even though it's difficult to find the evidence. It's a bit murky. And so I think they can make a bigger deal about that 2 billion carryout thing, especially if it's a little bit above it. And it's only a little bit above it. I could care less, frankly. But I just think, yes, it does cause an issue here that they can put this lower than we'd like. And at the very least, stall things out. It can be a headwind. It can be a struggle for corn for a while here, okay? Whereas beans got something a little more interesting, liveliness. And the interesting thing is, wheat, I think, has got something more interesting, a little more liveliness to it. Corn's going to be in the doldrums, a little bit sleepy, I think. All right? But nothing has changed my mind when I look out to summer. All three markets ought to be higher. And if we can throw a crop problem on it, can be even higher still to even much higher. Even though we're not seeing a lot of evidence of that longer-term stuff in terms of will we actually get a crop problem. Everything's intact for it, but there's nothing standing out there saying, yeah, we're going to get it. All right? Past results are not necessarily indicative of future results. Have a great day. Thank you.